One of the things that I hate the most when I'm trading is watching the price drawing consecutive candles of the same color without stopping. It can be to the upside, printing green candle after green candle after green candle after green candle, or the same can happen to the downside where the price just doesn't stop falling, dropping. And this is so frustrating because I want to take advantage of the trend. I want to catch an entry point to ride a next leg to the upside, catch another entry point to catch the next leg to the upside. And the price just doesn't stop moving. It keeps going up, up, up like this. At every new candle that is printed, it just gets later and later to enter. And you guys know that when we try to chase the price, when you see it printing candle after candle of the same color, and when we decide to enter, the price will just immediately reverse against us. And this is scientifically proven, guys. The market is waiting for us to do that mistake to reverse and hitting our stop loss. Let me know in the comments if this happens to you too. If you follow me for some time, you know that I like to take 1 or 2 quick trades right at the open of the markets and be done for the day. So most of the times in less than 5 minutes I'm done for the day, either at the London Open or the US Open. Both are great times to do this kind of trading. So today I'm going to share with you what I do when I see these non-stop price action moves. Hey guys, I'm Pedro and today we are going to learn how to chase the price with a small risk and a potential great profit. I'm going to show you an example on a lower time frame, the ones that I like to scalp quickly. But guys, this works on all time frames. Oh, and what a coincidence, I just happen to have an example on my charts. It almost seems that I already searched this in advance. But we can see here 1, 2, 3, 4, 5, 6, 7, 8 red candles in a row. This is a 2-minute time frame. This is nasdaq, the nasdaq index. On my broker it is called US Tech. On your broker it may be called US 100, or if you trade futures it's the NQ ticker. And this was actually the open of the US market, and you can see here how the volumes increased after the open of the US market, and that's when it started this consecutive non-stop drop with 1, 2, 3, 4, 5, 6, 7 candles. I'm not counting the other one because it was before the open, but 7 candles. This is a 2-minute time frame. This is 14 minutes to trade, guys. 14 minutes without an opportunity to trade, and I should already be done at this time. Well, I wasn't actually trading this because I already had my day done in the morning, but I was watching the markets because I had traders. Some of my members were trading the US Open. So guys, let's look at this chart. And the first thing that I want to tell you is that here we had the low of the day. So I was actually expecting, as the price came from this higher point here, and as it touched the low of the day here, I was expecting some kind of bigger reaction than what it had here. It actually reacted something like around 12 points, which was enough to make a quick scalp, aggressive scalp, but not a reaction as big as I was expecting. So what would I do in this kind of scenario? The first thing that I do is to go to a lower time frame. So we are here on the 2-minute time frame, and I'm going to switch to the 1-minute time frame. And here we have our first drop that hit the low of the day right there. And we can see that the price broke the low of the day, and then it made a smooth pullback to the upside. And you can see here lots of wicks, 1 week, 2 weeks, 3 weeks. And these wicks, they show a lot of rejection from this zone. So my first trading opportunity here would be shorting the break of this pin bar here, this last candle that was printed and left this big wick at the top. The break of this pin bar here, it would be a short opportunity to me. And then just ride the price to catch a lower low and take my profits. And immediately after that, we see another similar situation. The price stopped here. It went up close to the moving average again. You guys know that I like to use the 8, the 20 and the 200 moving averages. All of them are simple moving averages. The price came here very close to the 8 moving average. It left another candle with a big wick at the top, and the break of this low, it would be another possible entry for me to ride another leg to the downside and take some profits here. These are the trades that I could take here, but then something happens and that would prevent me from taking a trade right away. And what I see here is this big, huge green movement to the upside. You see how big is this green candle compared to the green candles that we saw during this drop? This is something that we don't want to trade against. And when we see a big move, a big pullback like this, a strong pullback like this, we shouldn't expect an immediate break of the previous low. It may eventually break it in the future, but it will not be at the first try. And this is the filter that I want you guys to use to stay away from trouble. Now let me clean this and let's go to the 2-minute time frame again. And look what happened here later. We had our first drop here, and then we have something similar but to the upside. We see a lot of green candles. 1, 2, 3, 4, 5, 6, 7, at least 8 green candles, then a small stop and 2 more, but at least 8 green candles without a stop here. And we can use the same strategy, the same technique here. So I'm going to clean this and we are going to the 1-minute time frame. So here we are. This is the 1-minute time frame, and this is that huge big move to the upside. So after the price starts this uptrend, this move to the upside above the moving averages, as the price breaks the high of this candle, this could be a possible entry opportunity to go long and ride the trend, expecting some kind of break of a previous high and start thinking about closing somewhere above this previous high with a decent risk reward. And this is where the price was just keep going up on the 2-minute time frame, printing green candle after green candle. And then we see here again the price stops at some point. It holds on the upper part of this green candle. It prints this small red candle, and as it tries to break this red candle, this is another opportunity for me to go long. And remember guys, this is still while the 2-minute time frame is still printing green candles after green candles. Then we have another pullback here, and the break of this high here can be a possible opportunity to go long again and take some profits on the way up. So guys, this is how I use this concept of consecutive candles of the same color to take trades, because they create trends on lower time frames. And when you spot these consecutive candles of the same color, you can go to a lower time frame and take advantage of those moves. If you want to learn more about this strategy, you have a link on the description of this video where you can get a free 6-day trading course. So guys, I hope that you enjoyed this video. If you did, please leave me a like, subscribe to the channel, and let me know in the comments if you want to watch more content like this. Take care, and I see you again on the next video.